question where we blow apart the stock market and put it back together so that it makes sense for you. Or maybe on a day like today, just smash it apart and leave it there. Got a big, nasty growl from the bear, more than 2% in the S&P, the Dow, which lost all of its gains for 2012 that it had put in, and the NASDAQ. NASDAQ is still up about 10% for the year, but just hanging on by its chinny chin. Really, stocks had a crash and burn, oh, the humanity kind of moment on Friday. What led it off was a bad jobs report. Of course, you had the things going on in Europe, Spain trying to bail out banks futilely, the uncertainty over Greece, but it was the jobs report that came out showing that U.S. employers only added 69,000 jobs in the month of May. 150,000 were expected, and in a Bloomberg survey of economists, the lowest was 75,000. So this was worse than anybody thought, and the number for April was brought down to 77,000. So you've got an average of 74,000 for the past 2 months. Look at this. This is the monthly change in non-farm payrolls. We were up over 200,000 per month, December, January, February. Feeling like a man, like we're coming back. Now we're pipsqueaks, weaklings, below 100, below 80,000 for each of the past 2 months. Not good news, folks. Despite all the heartbreak and wrenching stuff here in the U.S., you should still be proud to be an American. U.S. stocks in the red here, SPY, down about 9% year to date after today's losses. You've got France, Germany, the UK, Spain, forget about it, and Italy down about 25%. So we're very badly racked here since April 2nd, the high in stocks, but we're not as bad as the rest of the world. Talking about unemployment, over in Europe, 11%. Ours is up to 8.2% because of new people coming into the labor force, but 11% for the past 2 months in the 17 countries that use the euro. 25% here in Spain. Arbeitslosigkeit, unemployment, 11%. But what is the possible salvation for Europe? You've got Mario Draghi over at the ECB. He wants to coordinate in a central way bank bailouts in the Eurozone to try to maybe put a little more money behind it. But he's got to work on Angie Merkel because she doesn't want to have any part of Eurobonds or anything like that. So, and then you've got Greece voting on the 17th of June. That could help one way or another. Let us know which direction the market is going. Oh yeah, by the way, in China, things aren't exactly kicking. Chinese manufacturing, the PMI index over there, coming in at below 50. Chinese manufacturing in a state of contraction. So don't expect for things to get better there. What's breaking down? Well, here's the Earth, and here's China over here. Here's the US of A, soccer moms and school kids, people doing services jobs. In years past, it was okay. We were ordering things. We were going to the store, going into, Pier 1 imports or something like that. But you buy a bunch of junk. So the Chinese have to make it. We're not buying the junk we used to. We don't have as many jobs as we used to in 2008 or 2009. So we're not buying the junk. The Chinese aren't making it. The Europeans are disintegrating. And their single currency that facilitated global free trade is going away, or at least becoming less powerful. So we've got big trouble on our hands. Oh, who's riding to the rescue? Another liquidity injection from Ben Bernanke. He's kind of feeling a little bit of a dirty Harry. He said before that, if the economy decelerates, goes into the tank, stocks tank, he'll be there for QE3. Well, go ahead, make my day, he's saying. He's got to be saying that. Well, here's something to think about. If we do QE3, the purpose would be to lower long-term interest rates to stimulate people to buy riskier assets. But long-term interest rates have already hit new lows, like this limboer right here. He really got low. We've seen him before. 10-year note got down to 1.44%. New low, hasn't been that low ever. Not since JFK. JFK to, check that guy out. Is that Barack or is that George? It's a little bit of both. Actually, folks, we are at the lowest rates we've had, and people haven't really borrowed to do anything economically productive in the grand scheme of things in the past few years. Hopefully things will get kicking. Gold is sniffing what Ben Bernanke might be cooking with QE3. Gold was up almost 5% at one point today. GLD up about 3.84% today. GLD was down to 150 not long ago. 157, 158 it's tagging today. Look at the gold miners. The GDX is the gold miners ETF. It bottomed out in the middle of last month. That sucker has shot higher, along with companies like Goldcorp, GG. If you believe that QE3 is coming, you might want to just grab a hold of a little GG or GDX. The banks were no place to be. Consumer staples were no place to be. Tech stocks were beaten down heavily. Maybe this is the time to just keep a lot of cash on hand and see what happens.